Herkese merhaba. Küresel belirsizliklerin arttığı bir dönemde gözler küresel değerli metal piyasasında ve bu çerçevede dünyanın en büyük çevrim içi değerli metaller piyasalarından biri olan BullionVault'un araştırma direktörü Adrian Ash ile buluşuyoruz. Mr. Ash, thanks for joining our program.
You're very welcome.
First of all, let's talk about the big picture. Nowadays, people say that gold has recently been described as the sum of all fears in the world. Do you agree with that? And at this stage, what fear do you think the market is pricing more aggressively right now?
The thing with gold right now is, yes, I think there has been a lot of fear of currency debasement, of inflation, fear of government debt being too large, particularly in Western Europe and the US increasingly. Fear of financial falls in stock markets. I mean, obviously the AI bubble is attracting a lot of attention. Tech stocks look very overvalued, and they've been the real movers for global stock markets for some time now. And of course, you've got geopolitical risk. You've got geopolitical fears, whether it is the continuing war in Ukraine, whether it's, the ongoing conflict in Gaza, whether it is China threatening Taiwan, whether it is Donald Trump ripping up the NATO alliance. There's a lot of, I think Donald Trump has really kind of turned everything on its head. And that has really driven a lot of people to look for reliable, safe haven assets. Typically, you might look at government bonds. US treasuries are often seen as a kind of safe haven. But today, do investors really trust the US to deliver on its debt in 10, 15, 20 years' time? So I think that's really part of the appeal for gold. But what we have definitely seen over the past couple of months as well is we've seen a lot of greed. Gold has got very overexcited very quickly, and you can really see that in the silver market. Silver typically does what gold does, but more so. And what we've seen in the last couple of months is silver has got really overexcited very quickly, very hot. And we've had that massive spike in the silver prices up to $120 per ounce and now back down to $80, having got as low as 65. I mean, really pretty dramatic stuff.
So, do you agree with the fact that some say so? This gold rally is different from the other ones. And always people say that the rising cycles are long-term in gold. When do you think this rising cycle started? Some say that it's the Russian-Ukraine war. And how long do you think this cycle will continue?
Sure. I mean, I think the Russian invasion of Ukraine, actually, the gold price rose on that. I mean, it was the kind of geopolitical event you would expect gold to respond to. But gold did then come back. And really, gold didn't actually start to move higher until October the 6th, right? It was really the Hamas atrocities in Israel and then obviously Israel's war on Gaza. You might not connect that with the gold price, but I think it was, instability like that in the Middle East. I think really kind of put a question mark over, well, how would the West respond? Obviously, Israel has a lot of Western alliances. What does this mean for America's attempt to grow its alliances with other Middle Eastern countries as well? So what you then had 2024 and into 2025, you've really had a surge in Chinese private investment into gold. And I think this is what makes this different. Definitely, you've had central banks participating in this gold move like we haven't seen in my career. Central banks have been buying gold on and off 10, 15 years now since the global financial crisis. But definitely what happened to Russia because of its invasion of Ukraine, sanctions, frozen assets, what's happening in Belgium with Euroclear, that's raised a question mark for a lot of particularly emerging market nations who maybe don't feel that they're aligned with America, but they're not aligned with China either. And they think, well, maybe gold is a route to having independence in terms of central bank policy, in terms of reserve stability. Definitely that's a big part of it. But what's really moved the needle, I think, last year in particular, Western private investors came back into the gold market. And underpinning this, you've seen a real move into gold from Chinese wealth. China is the number one consumer, the number one importer, the number one central bank buyer, the number one mining country for gold. And I think China's role in the gold market is becoming ever more important.
So you name central banks as a game changer in China and geopolitical risks and also Trump factor. So do you think this gold rally has something to do with the so-called challenge to the throne of the dollar as well?
Definitely. I think a really interesting comparison is to think about the period we're living through now, and take a look at the early 1970s. US President Richard Nixon abandoned the gold standard for the US dollar in 1971, really as a way of protecting America's gold reserves, because, when America said it would give you an ounce of gold for $35, that risked a run on America's gold reserves. So Nixon shut that down. What that did, of course, was that kind of defaulted on America's promise to the rest of the world that it would give you gold in exchange for dollars. What we're seeing, I think, with the second Trump presidency is a similar shock to the way that particularly America's allies see the world. That America is a source of stability politically, it is a source of financial stability, it is a source of reliable liquidity through the dollar, and that the kind of chaotic policy statements that Trump has put out in the last 12 months have really undermined confidence in how the global political order works. And I think the dollar is central to that. I think the question mark over the dollar is now as big as it was 55 years ago in the early 1970s.
Do you think a new type of gold standard will emerge from this in the near future? Do you expect that?
Not in the near term. I think for two reasons. One, if you look at why the gold standard ended 50 years ago, it was to protect national gold reserves. And, it was about actually saying, well, if we make currency convertible to gold, we will lose our gold. So if we want to protect our gold reserves, and if you look at behavior today, central banks are growing their gold reserves. They want to have more gold. They don't want to lose it. And the second reason is a gold standard under any circumstances really means you need high interest rates as a rule. You need to give people a reason to not take gold instead and to leave their money in the bank. And to do that, really, you need high interest rates. Now, Turkey's experience of the last 10, 15 years, of course, is that, when inflation is stronger than interest rates, people will take their money out. They will seek to have gold instead. So I think the idea of a gold-backed currency right now is for those two reasons. One, countries do not wish to give away their gold. And two, no one wants to have the kind of hard, strong money that you need to run a gold standard. I don't see it happening anytime soon.
Okay, so you named Turkey, so let's ask a question about Turkey. How do you see the role of Turkey in the global gold markets?
Turkey is massively important to the global gold flow. I mean, it's the fourth or fifth largest consumer of gold globally. Its central bank policy on gold, of course, has been, very important and very interesting. The way that the central bank, back in 2012, began to allow commercial banks in Turkey to put some of their reserves into the central bank system in the form of gold. And therefore, of course, that was when there was the real explosion of private investor gold accounts at Turkish banks. But I think that's a really interesting move. It's a way of actually putting gold back into the financial system in a way which now looks actually, kind of like one of the first moves of, any major economy, of actually saying, gold is an important asset and it should be part of the financial system. So I think Turkey is very much at the forefront of how gold is perceived by investors and consumers worldwide today. Very much, the way that Turkish households and investors have looked at gold even before then, over the past 10, 20 years now.
As BullionVault, do you have any plans to be active in Turkey?
Not at the moment, I'll be honest. I mean, Turkey, we know, is a very large market. But of course, the thing with the Turkish market as well is it's very well served. What BullionVault enables you to do is to own gold in a vault. That's not really, prior to our launch in 2005, that wasn't something you could do very easily in the West, right? In Western Europe or North America. Turkey, of course, you have a lot of very mature, well-developed and cost-efficient products already in the gold market. So it's definitely an interesting space.
So could you please name some of the volumes in your platform? In how many countries are you active
Sure.
in?
Yeah, so I mean, globally we have over 125,000 customers now. Most of those, 90% of those, are Western Europe, North America, but we have customers from 175 countries worldwide. In terms of trading volumes, gold is the single largest as a rule. Our customers can buy and earn gold in London, New York, Singapore, Toronto, or most popular is Zurich in Switzerland. When you buy gold on BullionVault, you own gold in a large bar. So you own grams of fine gold within a large, good delivery London bar. So that's really what we do. Is we're a fintech business, right? We're a technology business, and we plug you as a private investor into the wholesale market for gold bullion. So you skip all of the costs and all of the hassle and all of the friction of buying and selling small bars or coins. So you're getting very much better pricing to buy, very much better pricing to sell, and you're in secure, high security, market recognized vaults. In terms of turnover, it's exploded in the past couple of months. I mean, there was $1 billion of gold, silver, platinum, and palladium changed hands on BullionVault in January, which is a new all-time record. In terms of new customers, new year to 2026 has seen a really sharp move. I mean, in terms of, we've never had so many new customers as we did last month. And that number was 80% bigger than our previous best month. So it's really dramatic step change in the level of interest amongst Western Europeans and North Americans, I think, in precious metals.
What are private investors actually doing right now? Buying rallies, buying dips, or sitting on the sidelines?
Our existing customers have actually been taking profit just very slightly for kind of 2-3 years now. If you look at the gold price and the way that it's risen, if you bought gold during the COVID pandemic in 2020, or you bought gold during the Brexit referendum in the UK, which was a political shock, and when Trump won for the first time in 2016, or if you bought gold at the very top of the global financial crisis in 2011, 2012, you've made many times your money now in precious metals. So it's natural for investors, I think, to take some profit. But what we haven't seen is people rushing for the exits. It's more, I think, about portfolio rebalancing. People have taken some profit on precious metals and maybe revolved it into other assets, whether it's into crypto or it's into equities or it's into bonds even, or real estate. So it's been quite marginal, the level of profit taking. For new customers, I think the initial rush that we saw, particularly at the end of January, when silver spiked so much higher and gold got to $5,600, I think new investors into the precious metals market are now being a little bit cautious. They're waiting to buy the dips. And that's definitely what we're seeing. Gold back above $5,000 is not quite as popular as it was last week when it was at 4,800. Same with silver. Now that we're back above $80 in silver, some of that bargain hunting has eased off.
Have we seen the dip in the gold and silver? Do you expect the rise continue in the coming future?
I don't make price forecasts. It's very, I mean, at the moment, I think the only thing I can promise you is volatility. If you look at what's driven the gold and silver price to these levels, I think what might be interesting over the next week or two is that this coming Friday, China will close for the Chinese New Year holiday. It's a week-long holiday. Now, when you consider China's impact on gold and silver prices and its importance to the gold and silver market right now, Chinese New Year is, of course, the busiest gold buying festival in the world now. It's bigger than Diwali in India. However, the market will be shut, right? The wholesale market in Shanghai will close on Friday evening and it won't open for another week. So often what you see at Chinese New Year is you see Western global gold prices, Turkey as well, they might actually take a dip because you suddenly lose for a week. You lose that demand from China, the biggest number one consumer of gold. So it's possible we're going to see some volatility going into Friday and then early next week, I think.
So last question. If you would name only one metal, what would you buy?
I think it would have to be gold at these levels. Platinum has been very exciting. Platinum and silver, very similar path, really broken higher, made new record highs, having struggled in previous years. Palladium is very interesting as a very contrarian play. Nobody likes palladium. Everybody thinks palladium is rubbish. I think it's worth a look from a very contrarian, speculative point of view, maybe.
Adrian Ash, thanks for joining our program.
You're very welcome.